Hey, it's Thursday the 28th, 2019. Still March. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. And if you have not yet joined the family, please visit TradersWay.com, open up a demo account, take you maybe 30 seconds. You can choose from a fixed spread, a variable spread, an ECN account, your way at Traders Way. Once you're done with that, once you set it all up, like I said, maybe 30 seconds, then you can download MT4. Then come back to this video, and in the description there's a link to get my MT4 templates, indicators, EAs, etc. And you follow the little video that's included, and it tells you where to put everything, and suddenly, ta-ta! Your charts look like my charts, and my charts look like that. So anyways, nice to meet you. Thank you for being here. Please take a second of your time and click like or leave a comment. And if you're new, please subscribe. Oh, is that right, Emil? Emil says oil's down. Okay. Okay, well, I guess we'll start with oil then, huh? Oil's down, all right. Is it really? Let me get my drawing tool. All right. Oil is down. All right, well, let's take a look. I'd like to say oil is at the bottom of the range. It's not trending down, not yet at least, because a trend is this. Lower lows and lower highs. So at this point, all it's done is it's gone to the top of the range, the bottom of the range, the top of the range, the bottom of the range. So that's still very, very likely. So you might say oil's down, Emil. I might say oil's at the bottom of the range. Okay. Cool. Right on. Anything else going on? Well, where the top is a weekly R1, so maybe the bottom is more like a weekly S1. So if you were a bull, you might be interested around this price for it to turn bullish. So a bull is interested in this, and a bull is interested in that. Okay, a bear should be done. There's nothing to do here anymore for quite some time if you're a bear. Wish I could turn back time to the good old days. Okay. Oh, you have a daily target for WTI? So weekly, it's just, we're at sort of at the bottom, but if you switch over to a daily, yeah, it's slightly out of position, but yeah, just like I just showed, there's two reasons. There's basically this and basically this, right? Yeah. So bear would get the same price maybe tomorrow and try like that if you're a bear. You prefer that template or this template? Now that is my PC making that sound. You guys had static yesterday. Well, it's not quiet in here today. Yeah, totally. I don't know what it's doing. Okay, I got a question here. What were we in? Oil? Okay, let me go back to that. How much of a breakout is a breakout? I'm just trying to get it drawn up properly. Okay. How much is a breakout until you know for sure? Well, the true answer to that is you never know for sure. So you got to manage the risk. The risk is always going to be there. Okay. So are you talking like, what if you're outside here by 2 pips, 20 pips? Is it enough? Yeah, maybe. Okay. But you really don't know. Not with a range. When you're in a wedge, for example, so like prices up, prices down, prices up, prices down, prices up. The closer you are to the apex, the more trustworthy the breakout. That's one way of looking. So if it breaks out up here or here, it's less likely. You're more of a potential for a fake out. But does it ever kind of do this? Yes. That's why you manage your risk, right? So if you sold here, you got to have a stop somewhere because that's your trade plan. Being back into the range is not part of your trade plan. No, that's my other PC by Porsche Design, not by Ferrari. So I have an exam today. Does anybody know what that equation is? That's one of the things I got on my mind right now. Oh, sorry, this is a 1, n minus 1. That looks like real math, huh? if you can tell, my brain is just fried. But anyways, that's what I got going on. Well, not variance, covariance. Yeah, covariance. It's not standard deviation, but this stuff is sort of, so it's looking at sort of the measure of X minus the mean of X. Mean sort of like, well, the average, and then how far is X from the average. It's a deviation. It may not be the standard deviation, but you're looking at how far X is from the average X, how far is the measure of Y from the average of Y, okay? But then you're looking at an index of X's and an index of Y's, right? And then you want to sum all of that, right? And finish up the equation. Yeah, anyways. So I'm trying not to forget. But anyways, good job on there were, what, a few people that knew the answer. Yeah, but it's covariance. But we don't use covariance in Forex, right? We use a standard deviation. And there's a couple of reasons for it. A covariance will say there's a positive linear relationship. And it might say in percentage per pound or something, right? So you got like these weird units. So then a standard deviation not only will tell you direction, whether it's positive or negative, right? But a standard deviation would look like, let's say, negative 0.88. Okay? So it says there's a negative relationship, and it's very strong, very, very, very strong. Right? Where this doesn't tell you strong, covariance won't tell you strong, it'll just tell you that there's a positive linear relationship. Standard deviation will say, let's say if gold goes up, 88% of the time the US dollar will fall. And you say, oh, well, there's a negative correlation. In fact, yeah, a strong negative correlation. And so that's the nice thing about correlation. The reason why we use correlation is it gives you direction, strength, and it doesn't. You don't say like ounces per dollar, right? We don't say negative 0.88 ounces per dollar. The units cancel out when you do the math and actually go back to that formula I just drew. You can do the math, and what happens, the way that the math is set up, is the ounces and the dollars cancel out. So what the standard deviation tells you, or no, sorry, not the standard deviation, but the correlation tells you, if that is true, when gold goes up, almost always, 88% of the time, the US dollar will fall. Okay? So that's why we don't use covariance, we use correlation. Yeah, totally. I have to use my time wisely. Okay, so anyways, yes, this is moving sideways. All right? Yes, it's moving sideways. You can look for a breakout pullback, or if you're a bear, if you're a bull, you're looking for a rise back to the top of the range, in which you should expect a drop again. Okay? Same sort of thing. Yes, Mac. Is that right? Wonder if their attitudes change if you like sell them to the circus or make them work in a textile factory. You know, one of the first labor laws ever passed in the United States said that if you were under the age of 10, you could only work 10 hours a day, 6 days a week. Did you know that? And I think, what? People are just, how do we get fat and lazy? Yeah. The amount of free time we have. So the kids are protesting climate change. Cool, right on. Great. They better do something with their lives, though. Oops. Well, I only laugh because it's sort of like my comment I made about churches not long ago. I don't have a problem with religion per se, but I don't like churches. But this idea that people go to church for the social aspects, to me, I thought church had to do with worshiping and praising God, whatever your religion is, right? I thought it was about God, not about your buddies, not about dressing up pretty and impressing your friends. To me, that's it's the worst thing. Like, it's so bad. I don't understand the process. But anyways, so I guess what I'm saying is I have no problem with kids being, trying to be positive for the environment, changing the world, making it a better place. But sometimes I wonder if it's just about being cool, and that's what everyone else is doing on Facebook. So I'll do that too. But who cares? It's not for me to comment on. USD CAD, we had a question on that. Yeah, look, we're still at the top. Okay, so if you're a bull, you're supposed to be out. If you're a bear, you're supposed to be setting up the next move, which is this move. So you need oil to go back up. You need dollar to go down. We need the stock market to rally in that case. Yeah, I suppose, Chuck, and that's fine if it's a senior skip day. But it's just weird how, like, lots of, I guess it's a normal human thing, but we say, like, we're doing this to protest the injustice against our people. So now I'm going to go rob a liquor store and a sporting goods store, and I'm going to loot, and now you're going to see the respect we deserve. I'm like, dude, it's a really confusing message. Yeah, okay. Well, Sammy, it may be bullish, but you can't buy it here. So that's the issue. Okay? You had a chance on probably Tuesday. So that's a basic Tuesday swing trade. It's not ideal, but if you're bullish, I mean, that's the way to do it, right? But, like, there's nothing to do now. It was an easy trade yesterday. Not a good trade, but an easy trade. Yeah, there's nothing to do now. Yeah, I thought that's what, see, now we're going to get into religious philosophical discussions. And, you know, I'm pretty sure that that's what Jesus said. He went to the Jewish temple and the Jewish elders, and he's like, man, I don't like it here. I'm going to go sit on that hill, and I can talk directly to God. I don't have to speak through an elder, and I certainly don't need to be inside of a temple. I can just sit on the hill, and God is inside me. I can talk to God directly. I don't need priests. I don't need popes. But then that gets weird now with the Catholics, right? Because now, what would Jesus say? He's like, I don't need a pope. I can talk to God. But I'm not a Catholic. I don't know Catholicism. But there's some very interesting questions I often ask just to see the response. But history's interesting, right? Well, initial jobless claims should be on trend. Okay, so we know that. And then GDP, well, GDP is very backwards looking, so we already know all that stuff. So like, remember yesterday we were taking import-export data, and that's a subcomponent of GDP, and so we were calculating basically the next GDP. Right, so a little backward looking. I don't know if I'm that interested, but and it's not in 15 minutes, it's in 45 minutes. Oh, you said in 35 minutes, sorry, misread that. So I think the market has generally moved on from that. But we can watch it when it comes out. But instead of like trading news releases, one of the things I tried to do is discuss things sort of before the big news release or after the big news release, so you have more of a way to understand sort of its place in our universe, right? In economics, or you know, outside of just the number is 2.8, woo! You know, I try to focus on what does it mean and how does it compare to everybody else and how do you think about that and how does it fit in a portfolio and should you change a portfolio versus just a short-term trade opportunity, right? Because that's just too easy. Oh, well, see, once again, a news release coming out shouldn't affect your position unless you're simply like, if all you do is day trade, or even shorter, like spot trade and day trade, then these things are this volatility can be unlucky for you. Sometimes lucky, but sometimes unlucky. Again, what I'm trying to do is, like, if you entered your trade on Monday and you're still in your trade, this probably won't affect you. If you entered 2 hours ago, okay, then you know you should still know where your stop is, so move your stop. Okay. So let's go back to how we talked about this in the past. Okay. We use this linear regression to measure sort of the medium-term trend in that color, and then we looked at the shorter-term trend in this color. Actually, it's this one. It's just, okay. It's this one here. And so what this is kind of telling us is down here, you should look for it to head back up. Okay? That's what tells us. The trend is generally down. Okay. So as we get in here, but you'll notice, you'll say, Wayne, well, what's all this stuff? Oh, this is the stuff I drew for you like 3 days ago, saying that, you know, when we're down here, it'll probably find support. And here's what I drew days ago to say if we're up here is where you're probably going to find resistance. Okay. Here, this area here that I'm circling now on Friday afternoon is where the where the bulls exit. Do you remember talking about this? Bulls exit. Okay, so now we're approaching an area where bears exit. So I hope like I've been doing this sort of description of the market now for maybe a month or two, well, maybe a month. Okay, is this starting to help? Is this this newer description, is it starting to help? Like, are you starting to think this way with your trading? Where will bears exit? Where will bulls exit? These are not entries, these are exits. But I think this description, since our brain is so focused on where do I enter, where do I enter, where do I enter? Sometimes if you reverse engineer the thing, you can start with, well, where does my adversary leave? What's the minimum? I don't know. Right? When does my adversary leave? Maybe knowing that information increases your chances of success. Is one kind of thought, right? So guys, look, if you only have 50 bucks or something like that, practice on a demo, get a second job, sell anything you're not using. Sell your parakeet. Save your money. And in 2 years, after you've accumulated some cash and you've developed some skills, then fund your account. Okay? So you might be smart enough, you might be skilled enough, but you're undercapitalized. Okay? Just think of it like a business. Like you're like, Wayne, I want to open a restaurant. I love cooking. People say I'm a great cook. And I'm like, great, that's awesome. Do you know how to run a small business? And you're like, no, I know how to cook really well. Okay, that's fine. But if you don't know how to do accounting or marketing, right? Just at the basic level, if you don't know how to keep your books and manage a budget, and if you don't know how to market and do customer service, then forget it. You might be the world's greatest cook. Your restaurant's going to suck and go out of business. And then my next question is, okay, once you get that taken care of, how much money you got? 100,000, 200,000, 300,000? You're like, well, I don't got any money. Well, then you can't open a restaurant. Again, you might be a fantastic cook, but you don't have any money. So what you could do is get those skills that you're missing, right? Continue to be a good cook, learn some basic accounting, learn some basic marketing skills. You got a year or two. Take a second job, right? And save that cash and bankroll yourself, because you're only going to be a better business person down the road. Your cooking skills are still going to be good, and you'll be properly capitalized, or at least better capitalized, right? Because Forex and starting a restaurant is same. If you can't make enough money, right, like you should be able to plan on surviving the first year or two, even if your restaurant is unprofitable. Most restaurants just simply run out of money. They don't have enough cash flow. They're a good restaurant. People go there. They shut within the first year because they shot their wad on stuff that doesn't matter, and they don't know how to run the business properly, and they just run out of cash. Good restaurant, poor cash flow. But Forex is very similar too. Most people blow up their trading account in the first year, and I'll say, oh, well, how much experience did you have before you started trading real money? Like, oh, I didn't have any experience. Like, really? And how much money did you have to invest? Only had $1,000. It was all the money in the world, so I put the whole thing in there, and I'm like, whoa, 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 whoa. That doesn't make any sense. You understand? Like, that doesn't make sense. You're like, I got some money. I'm going to start a restaurant. No, I don't have much money at all. I'm going to start a restaurant, even though I don't know how to run a restaurant. But I'm hoping it's going to make me filthy, stinking rich. Right? I got $1,000. I want to be a brain surgeon, and I gotta bang this out quick too because I need the money. Like, it just doesn't make sense. So I'm not laughing at the fact you don't have a lot of money. I'm saying work with me for the next few years, develop your skills, save your money, and when you're properly financed, properly bankrolled, when you're properly capitalized, and you're properly skilled with proper experience, now you have a fighting chance. Because even after all of that, you still might lose money. In fact, statistically speaking, you probably will still lose money. But give yourself a fighting chance, is all I'm saying. That might be true, Sammy, but I'm here, you know, I preach to teach, because some of you never had this. Right? So just that's what you should do. So when I started, I was a venture capitalist. So I had a really good job. I had money. I had natural good looks. But the best thing about me is my modesty. But I still took 2 years on a demo account. Yeah, and that is very true. And in fact, I think I covered that in the book, where I found something during my own business planning retreat. I did all the numbers and I did scenarios like a good, you know, financial person would, right? I created all these models to try to find which model works best. And I looked at, like, I started with this idea, like, if I paid 50% of the profits to me and the other 50% back to my fund, how much money do I make? This is per month, right? Per month of the profits. Okay? So if I make 10,000, 5,000 I pay myself, 5,000 goes back into the kitty. Then I tried, well, what if 25 to me, 75 to the kitty? Or 75% to me, 25 to the kitty. Back to the fund, right? You know what? This was okay. The account slowly grows. But after like a year and a half, I'm making like $7,500 a month. And here, it doesn't grow much at all. So a year and a half later, I'm still making $5,000 a month, basically, right? Give or take a few pennies. Then I noticed, well, what if I only pay myself 25% of the profits per month and save 75? All of a sudden, 18 months later, I'm making like $16,000 a month. And I'm like, jibbida what? Jibbida who? Right? Jigga what? Jigga who? Right? My popo, the popo, right? I'm like, holy crap, what? Then I'm like, oh, what if it's like 10%, 90%? All of a sudden it's like $42,000 a month, 18 months later, because I pay myself hardly anything. So I believe I wrote it in the book where I'm like, you know, I found many paradoxes. And one of them is the less I paid myself per month, the more money I made at the end of the year. And it was exponential. So the difference between paying myself 50 and 25 wasn't double, but it was like quadruple. And if the difference between this and, you know, it was like I don't know, like 700% more money because I paid myself 10% instead of 50%. So all of a sudden I'm like, well, what if I didn't pay myself any monthly at all? Right? And then you just go, right? You just go wham. You really start playing with these numbers. So you got to find a way to live without, like, what's the number one rule of drug dealers? Let's say you're a coke dealer. You make a living selling cocaine. What's the number one rule? Right? Don't snort your merchandise. Right? Don't touch your profits. That belongs to the fund. So you're better off. Yeah, number one, yeah, don't snitch. Oh, you can get caught. That, you know, you can buy your way out. That's not a problem. Yeah, yeah. So, right? So what you say is pay yourself at the end of the year. Don't use your own product. You guys got it. That's what endo is, isn't it? Isn't that the stuff you're supposed to smoke with your clients? It's not considered your own stash. It's the stuff you put to the side to hang out and smoke with your clients, and then, of course, they're going to buy more from you. Anyways, you know, grew up in Saskatchewan. I know my ghetto stuff. Anyways, I'm gangsta. Kids fear me. So anyways, don't touch your own product, and your own product is money, right? We're currency traders. So if you grow your account by 3% per month, right? That's like, what, 40? That's 50, that's almost 50% per year. Okay? So here's the next thing that you should do. Don't touch your account for 3 years. So learn how to swing trade, for example, so that you can trade and keep your job. Because what you want to do is grow your account by 50% one year, 50% the next year, 50% the third year. And then quit your job, right? So for example, right, I'd like you to make 5% per month. Okay? So if it's 5 or 6, it's somewhere between 5 and 6, it doubles per year. So let's say you start year 1, okay, Y1, 25K. At the end of year 1, you have 50K. Year 2, you have 50K. At the end of year 2, you have 100K. Start year 3, you have 100K. And by the end of the year, it's 200K. Okay, now check this out. Now you have 200K. So now you're in a pay year, 4. You start with 200K. At the end of the year, you have $400,000 now. Bear in mind, 4 years ago, you had 25K. Now you pay yourself. Now, you take this and say you're going to pay yourself a certain percentage of the 200,000 you just made. Okay? But if you added it up, that same percentage, and you took it out of this, the 25K you made, so you went from 25K to 50K, and then what? You take 50% of that out, now you're back at 25K. Or 25, so that's only 12.5. if you do it now, you have 75K. So however you calculate it, if you pay yourself during these first few years, when you get here, you're making hardly anything relative to what you could be making, right? And your account size isn't growing nearly as fast. Okay? So I think the best scenario is you become a swing trader, you do like weekly and monthly swings, and you never quit your day job. You just do this for 10 years. Because knowing that it's not like if you quit your $100,000 a year job, right? First of all, you give up the $100,000. So that's the problem, right? So you want to be a trader. But if you're taking the $100,000 out of your account, right? You're doubling it every year. I mean, it'd be nice if you could double it and pay yourself the $100,000. Like, it's so much better, right? It's so much better. Your account is growing so quickly. Every year it's doubling, but you also have a guaranteed income on top of that, plus benefits, plus free popcorn and coffee, you know. But most people have a job that sucks, so you can't wait to get out of there. But I'm just saying, when you crunch the numbers, you learn very quickly, or the models show you very quickly, that you should never spend your money. And this is actually one of the problems with being a full-time trader. You know, this idea that you buy your yellow Lamborghini, right? This is the big dream on YouTube, right? You're a poor young man, you have a cell phone and $50, but you see other guys just like you buying Ferraris and buying Bentleys and buying yellow Lambos. So all you need is MT4 on your phone and $50 and you're going to become a millionaire, and quickly. First of all, it makes no logical sense. So if you're falling for that, you might not have the intellectual capacity to begin with. But you know, but the problem is, how do you turn let's say even $500 into enough money to buy not K bucks. How do you turn $500 into a $200,000 Ferrari? Well, even if you could do it, the problem is, as soon as you buy your Ferrari, you're out of money again. Now you have a $200,000 Ferrari that depreciates by $30,000 a year. So let's just say $3,000 a month. Your investment now loses, guaranteed. Right? And so now you have, and in 6 years, you have a ridiculous looking Ferrari. People are like, oh man, who are you, Magnum PI? They're like, hey man, it's a Ferrari's a Ferrari. Yeah, sure, buddy. Sure, buddy. Oh, for sure. Right? So now your car's losing $3,000 a month. You don't have any money to pay for the maintenance. By the way, your cheap Ferrari, you take it in for a tune-up. It's $25,000. But I remember you started with a $500 account, so there's no way you're going to pay $25,000 to have your Ferrari tuned up every 3,000 miles. So it's depreciating, it costs all this, and you could have like bought a house that makes $3,000 a month instead of a stupid Ferrari that loses $3,000. Like, just the whole mentality of someone that wants to turn $500 into $2,000 and then buy a car with it, it's just so funny. Like, just the idea means you're probably not going to make it. Right? It doesn't make any intellectual sense. It makes emotional sense. Maybe, you know, maybe a pretty girl will like you if you drive a Ferrari, but the funny thing is, most pretty girls don't know the difference between your Ferrari and anything else, so that she doesn't care. She just wants to be loved and respected and admired and adored, just like your Ferrari. So anyways, so don't pay yourself, you'll become rich. And then once you have money, so I guess this is where I lost track a little bit. So once you grow your account, right? Here's the problem. Because I'm saying don't pay yourself every month, right? But let's say you grow your account and you do have 200,000. And so you put it as a down payment on a house. Now what? Now you don't have any money again. So now you should go another year, grow it to 400,000. You see? Now you're making 200,000 a year. You used to be making $2,000 a year, $20,000. Now you're making 200,000 a year. So you draw this down. So now your trading account has 200,000 again, and the other 200K you put as a down payment on a house, which does what? It appreciates. It goes up in value every month, and it's considered an asset. So your credit score goes way up. You own an asset. Seven years later, if you need cash, you can take it out of your house because it's an asset, right? So you can borrow against it, and you can pull 50 or 60,000 back out if you wanted to. You can stuff renters into your house, and they'll pay your mortgage for you. So your house goes up in value every month, and poor people pay your mortgage payment for you. It's just so sickening, amazing, isn't it? Right? This is where you need to get. So instead of buying your yellow Lamborghini, you're worried about drawing down your account. So the problem is that you will have to draw down your trading account just to live. But if you put some money into a house and it goes up value every month, and then you put some poor people in it, the poor people will pay the bank, so that the rest of the house ends up being free. So if you put 200K down, it's $1 million a month house, or it's $1 million house. It's going up by 10% a year, so you're making 100,000 per year. And you put poor people in it, so you don't live in it. The poor people pay it for you. That's why they're poor. And they're paying the mortgage, so you only have 200,000 invested in $1 million house. 30 years later, you sell the house for $4 million, and someone else paid the mortgage. I mean, oh my God, you're just making money hand over fist. And then what? Yeah, you have gray hair and stuff. Go get your yellow Lambo. Why? The house paid for it. You understand? And who paid for the house? The poor people you put inside and charged rent. Like everything you touch makes money. Oh, there's plenty of poor people. Don't worry about that. And by poor, I mean if you have a job. My wife gets really upset about this, but I'm dead serious. If you have a job, I don't care. I don't care if you make $350,000 US a year. If you go to work and essentially punch in a time clock or beg for vacation time, please let me go on 3-day vacation, please. You're poor. You po. Okay? Who makes $2 million a year in America? You're either a hedge fund manager, right? Let's do it. You're either a banker or you're a fund manager, or you sell rocks, or you got a jump shot, right? and crypto. sorry, crypto and crypto, right? President does not make the President of the United States of America makes $200,000 a year. You want to be rich, become the President of South Africa. You get a nice swimming pool and everything with it. But anyways, yeah, you got a jump shot, or you sell crack rock. And, yeah. So at least the positive of what I'm trying to get to, guys, here it is. You can be very, 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 very successful as a currency trader, and no one's going to stop you because you're the wrong religion, you're not tall enough, you're not skinny enough, your skin's the wrong color, your hair's the wrong color, your eyes are the wrong color. You know, none of this matters. It doesn't matter who your daddy was. It doesn't matter who you want to love or how you want to love them. All these things that you get filtered through, you know, what school did you go to? You don't have to go to Harvard, right? So you have the opportunity in front of you. And I do preach to teach, right? I take you through technical analysis and fundamental analysis every day for 15 years, right? And really, we were talking about this the other day, not a lot changes. I mean, some geopolitical things change, but like, so like opening up this other chart, I drew this for you the other day, and I'm like, look, you know, boom, it's going to go down, it's going to fall. It's all here, and I hope you really throw yourself in it, and I hope you give yourself a true opportunity to win. And I want you to think about the things we talked about today, because it's all part of the strategy. If you only have 500 bucks, and you're most likely going to want to spend it because you don't have much money, so you're going to need it. And just that process alone is going to take away from your ability to succeed. You see what I mean? So, again, one of the very first things, like after I became a full-time trader, I quit my job as a venture capitalist. I started trading at home, and about maybe a couple of months into it, or a few months into it, I went through a rough period, and I really struggled mentally, or emotionally, sorry. And I said, well, how did I find success in the past in my other businesses? Because I always found success. And I realized, you know, well, I need a plan and all that kind of stuff. And I always went on business planning retreats and all that kind of stuff. It was something I did a lot. I've did business planning retreats in multiple countries up until that point. So I'm like, you know what? I need to do a business planning retreat with myself. It was probably the best thing I ever did for my own personal business ever. Like, it was so important to my success. And I found, I really documented things like, how will I succeed? And it was the most amazing thing. Like, lots of amazing things happened, but the way I was trading in that moment, I carried that out through a 3-year, month-by-month pro forma cash flow statement. And I found out the way I was trading, at the end of 3 years, I would have $27 quadrillion. Is that enough? $27 quadrillion? Turns out I was a little bit over leveraged. Right? You know, just amazing things like that. So it turned out to be a game of survival. The secret sauce, if you will, is surviving as a currency trader as long as you can. Right? Oh, you got into the court. Right on, man. Boom. Good job. And I found that mathematically, and that's kind of what I took you through today, guys. Like, I just took you through, like, if you had 25 grand and you can get to year 4 and then not even pay yourself to the end of year 4, right? How much money will you have? And it's actually quite a bit. And if you can go to year 5, it's even way significantly more. And you probably don't need to pay yourself $200,000. You could probably get by on $100,000. So you're still growing your account exponentially, and you're making more than enough money, and you really like what you do, and you're passionate about it, and it brings you happiness and joy. Like, I really like being a trader and an economist and all that. It brings me, well, as close to happiness and joy as I get. And but you have to get there. Like, what if you don't make it to year 5? Or what if you make it to year 5 and you still only have 25 grand? Because you've been paying, like, car payments and stuff with it, and you're like, oh my god, Oh my God. You know, sell your car, walk to work, take a bus, ride a bike. You're like, Wayne, that'll take me a half an hour each way every day if I rode my bike to work. Yeah. I told you a couple of days ago, I get an email from a programmer of mine who's working on a project. He's like, sorry, I've been away for a while. I had to go to the hospital, right? I had a stroke. Like a real stroke, not a mini stroke. He had a full-on stroke. He says, the doctors think he'll be able to speak again, maybe in 6 weeks or whenever, but they're pretty confident he will be able to learn how to speak again. Then he's like, can I start working on the project now? Oh my God. You know what I mean? Oh my God, this guy is ready to work. If I said to him, hey, if you rode your bike a half an hour in the morning and a half an hour in the afternoon, but I'll guarantee you, you'll be able to speak again, he wouldn't bitch and complain about that. So it's sort of like if you had to ride a bike to work, but you could sell your car and put another $20,000 into your account. So not that you could take more leverage and more risk. Don't say, oh, well, Wayne kind of works for a broker, so he's trying to get me to put more money in the account. That's just negativity. What I'm saying is you need to be properly capitalized and have a long-term plan and vision, and then with as little risk as possible, slowly grow your trading account, and then even reduce risk further over time and save as much as you possibly can. Sell every asset that you're not fully utilizing, because it all goes in, because you can see the account grows exponentially. Every dollar is probably worth $20 for you. You're just, it's such a good investment, right? And don't buy a yellow Lamborghini. Once you finally find success, and by the way, it might take you 5 or 10 years to get rich, but then when you're rich, buy assets, because that's what rich people do. Rich people don't spend money, they buy assets. Remember how I said yesterday? Consumers spend, right? We did GDP. Let's do it this way. GDP is equal to consumer spending, right, and government spending, and then import exports minus X, right? What's this middle one? We have consumer spending, we have government spending. What's the middle term in the GDP equation? Thank you. It's only GDP, right? I can pull it up and answer the question. What's the middle one? Investment. In America, there's 2 taxation systems. One for businesses and one for poor people. You got to get yourself out of the C and into the I. So once you make money as a Forex trading business, then the money you do take out, buy a house, put poor people in it, and get rich. That's the secret to the world, ladies and germs. Okay? Consumption a little bit lower.
And 1.8%, 1/10 higher than expected in the final Q4 data.
1.8 on the core, so there's a little bit of commodity inflation in there. Yeah. Cool. And with that in mind, if you want to make like $1 million a year profit, you need to be able to walk into a bank and say, bank, loan me $25 million. And with the $25 million, you're going to buy a building. So I get them all, I see them all the time in New York City. Okay. You'll be able to buy a nice little skyscraper.
President Trump has been active on Twitter this morning, just saying once again that it's very important that OPEC increase the flow.
Right? You can get a building, and when you take the net operating income, subtract out the financing expenses of your $25 million, right? Take that out, you'll make at least $1 million a year. Okay? So all you need to do is be able to qualify, convince the bank, because you can find the buildings. The buildings, there's dozens of them. There's hundreds of them in New York City alone. One city. You can go to New York City, and all you're doing is buying the cash flow, right? Minus expenses is your net operating income. Then you got to pay for the bank, so you minus the financing cost, and you'll make at least $1 million a year. You have at least 100 different buildings to choose from. The one thing you need to be able to do, because look, is it really that complicated to manage the building? Now you can pay, I think it's 10% of the NOI, and you can have a firm manage it for you, and they're the ones that collect the rent and all that kind of stuff. So you can literally get it so that you can make $1 million a year and never even leave your house. The only thing you need to do is be able to convince a bank to loan you the money to buy a building that's totally worth $25 million and is producing profits where the bank feels like there's a 95% chance they're going to get paid back. So they should be happy to loan you the money if the economy is healthy. That's all you have to do, and you're done. Okay, there you go. So how do you do that? Why don't you bankroll yourself and get successful in Forex? Okay. Okay. So anyways, we're on the way to the target there. There's not much to do on that one. These were all planned out 3 or 4 days ago, guys. Okay. So I'm trying to see if there's anything new and interesting. Everything seems to be within yesterday's analysis, right? Yeah, that might be true about NYC, but the money's there. So whether like the cap rates are fairly high in New York City, there's no doubt about that. But regardless of that, you could just still buy it and make the money. It's there. It's just in the formula. The cost of the purchasing of the cash flow, the cost of financing your purchase, it still leaves you the money, so it doesn't matter. Now you might make more money in Atlanta, but maybe you don't want to live in Atlanta. Let me tell you, Atlanta is not New York City. I'll give you something better. Does anyone have the link to the, there's a free training course on YouTube under FX Bootcamp. Let me see if I can find that. YouTube.com/FX Bootcamp. So I got a question here like, what are the moving averages? All right, well, welcome to the team. By the way, I've been doing webinars for 15 years. Nice to meet you, finally. Right? Let me give you a better than a quick answer.
U.S. markets is driving some investors in foreign currency.
Looks like somebody got a free
some tips on trading and foreign money is Wayne
swing trading.
Chief currency coach
Hang on.
at Forex's FX boot camp. Wayne, good to see you.
La la la. This one. Okay, there's 4 videos. 4 videos. This one is approaching 200,000 views. That's not bad. Yeah, all right, guys. Yeah, some of you might get the point. Others may not. But, so, like, if I was your dad, not only do I want you to succeed at Forex, because it's a skill, and you're joining sort of the family business and all that, and I have a passion for it, so I'm sharing it with you. But I'm also trying to, like, there's another higher level of responsibility that I feel for you guys. So the next step is, you know, like, what is the real world? What is the real path? You know, how do wealthy people actually make money? I mean, I know many billionaires I talk to on a regular basis. Billionaires. And I don't mean like 1 billion. Right. But and so I know how they make money. Right. And they do have 20 and 30 cars in their garage, each $200,000 or $300,000, but it's nothing. It's like you buying a chocolate bar. So that's the type of person you should be if you drive a yellow Lamborghini, because it's like buying lunch. Like you don't get excited about eating a Chick-fil-A, right? Like, oh my God, I finally got to eat a Chick-fil-A. Well, maybe you do. But you should buy a Ferrari when you're like, oh yeah, I like these. This is nice. But it costs the same as a fast food lunch. Okay. The other reason is I want you to be a fund manager for me at some point, and I want you to find success and be able to carry that out. I'd love to give you $1 million. Wouldn't that be nice? Not to keep, but to trade. That'd be nice, wouldn't it? Okay. So these are the trades I took on Friday. Remember, long here? Or not Friday, sorry, Monday. And long here. Okay. I knew it was a little more difficult in a scenario like that, but it was reasonable to go here. And here's a bear exit, right? So it was a reasonable trade. Do you guys remember on these trades, we actually talked about where the bears would re-enter. We knew where right? We know where the challenge is going to be. Do you remember this part? If it's going to fail, where would it fail? Oh, yeah. How about this line here? So we knew, like, if you're a bull and trying to turn it north, this was the proper entry, especially since we knew bears were supposed to exit there. But where would the bears re-enter? Well, we also knew that. Okay? And also, you may recall, we talked about it essentially being next month's trade. That if you could stick with it, you're heading way down here. No, you can join the day trading and swing trading with performance coaching. That's enough. so I can't put you short again, right? So it's like when we were here, I showed you the long position and I showed you where the short position would be. But now we're here, you can't sell it, but you understand this is the sell zone. And there were lots, in fact, if I go through this, do you remember? I remember talking about this on Friday now. How about this see if you remember this. On Friday, on many pairs, I said, do you have the strength to wait for Monday or Tuesday? Do you have the strength to wait for Tuesday to enter your trade? How many people remember that? Like I made a fairly clear sort of anchor about, do you have the patience to wait for till Tuesday to enter your trade? Right? It's like, are you strong enough to be kind? Right? Are you strong enough to wait till Tuesday? Does anybody? Jim does. Marina says, waited, right on. Okay, but you see, if we go through a lot of these charts now, you'll see that a lot of the entries happened on the Tuesday, even though we were talking about it here. Will you, even though this just dropped by 1,000 bajillion, are you strong enough to wait? But the monthly is dead. This is not a monthly trade. It's actually next month's trade, but I don't need to get into that. So let's say like pound yen. Right, here's the Friday. Are you strong enough to wait? Not as good of an entry. It's not as perfect. Let me just change the template just to make sure, update it here. Yeah, it's not as good of an entry, but it's pound. Right, what are you going to do? Aussie, let's see how that turned out. That's 15 minutes. It looks like a lot. Let's go change it to the hour. And give it a couple clicks. All right. So here's Friday. Do you have the patience to wait till Tuesday? Well, this went to the R. Again, it's not as good. I'd rather it go to the M3. Okay. Now when I say M3, I think BMW. Trained like a monkey. Okay. CAD yen, was this the one we just, no, it wasn't the one we just did. All right, so let's look at this. Dropped like 1,000 pips overnight, right? Here we are talking about, do you have the patience to wait till Tuesday? Here's your Tuesday entry around the central. I've even marked it here for you. Gorgeous, okay? Has it fallen, made new lower lows? No, not yet, but it might, and that's the opportunity is worth the most. To get yourself into opportunities to win as much as possible is the point, right? Here's a Kiwi move, right? Here we are talking about, do you have the strength to wait till Tuesday? Okay, once again, not a good setup, but lots of these are range bound. So you're going to get these bigger upper moves, right? Because we're not trending. So this one is like a 786 before the drop. They're not good trades, but I think the lesson is a good lesson. Okay. Let's go through some dollar pairs. Are you strong enough to be kind? Do you know your heart has its own mind? Friday, do you have the patience to wait till Tuesday? That moved, well, that is a Tuesday. It didn't move high enough. So you can see, like, these are not beautiful trades, right? They're not beautiful trades, but there's something to the lesson anyways. And again, it went too high, but it did drop on Tuesday. But it's just, it went from support to resistance back to support again. Whatever. Forget about it. And this one did retrace but didn't drop either. So Whatever. All right, so here's my plan for the day. Let's do it this way. So later today, I'm going to get a data set like this. Price and time. That's all this is. Right? And they'll say, calculate the linear regression. For that, you'll need to calculate the slope. And of course, the standard deviation. Right? So this is like a scatter plot of price and time. And they're going to say, do the math. So yeah, it's a midterm, so I'm kind of looking forward to it. So what they're saying is, take this data, take all these samples, right? And do that mathematically. And what's the correlation and such? Oh, I can't wait! It's going to be so much fun. But I'm telling you, I thought statistics would be boring, but now it turns out like a lot of what we're covering is stuff that I've been doing in Forex for years and years and years. Just, there's a lot of people, like for example, there's lots of people that just do not know standard deviation. Guess I gotta go this one. Okay. So how do we capture 95% of price action based on relative samples of price and time data? Two standard deviations, as you already probably know. Two standard deviations from the mean being 20 periods. Two standard deviations captures 95% of all price. So here's the mean, right? And these deviations now represent 95% of all price action. So someone might say, these are outliers and we'll want to retrace back to the mean. This is an outlier outside 95% of price action. Outside of 95% of price action, it's going to want to regress back to the mean. It's deviated too far. Okay, that's two standard deviations. Now, if you insert another set, and now it's one standard deviation. Let's make it not red, but something not red. Okay, that's one standard deviation, that's 68%. Okay, so they're describing this to people that are not currency traders, and people have to, they're trying to remember this. One standard deviation is 68%, and two standard deviations is 95%, but that's only if they're symmetrical data. If it's not symmetrical, then it's going to be different. It's going to be on Gauss's law or whatever. It's going to be 75%. And they're trying to like memorize all this. And I'm like, oh, he's talking Bollinger Bands. They're Bollinger Bands, right? And it's really fascinating to think as a professor is talking about this real mumbo-jumbo wonky math. I'm like, they're Bollinger Bands. Oh, that's a linear regression. Oh, that's what standard deviation is. Oh, well, if you take the sum of the squares, you're like, oh, man, it's pretty interesting stuff if you're like us, you know, wicked smart. So wish me the best of luck, and I will see you tomorrow. Thank you for being a client of Trader's Way. If you haven't opened an account yet, please go there. Like I said, go there, open up the demo account, download MT4, and then underneath this video here, you can download all my chart templates. You can have them for free. There's like 20 profiles. There's like I don't know, 3 or 4 of my most used chart templates. There's probably 100 charts. There's an EA in there, all for free. So go to Trader's Way, open an account, then download MT4. Come back here, download the chart template. There's even a video that shows you how to install everything. And then tomorrow your charts will look like my charts and we'll rock and roll. Okay? And if you would you please leave a comment in the video or a video, any video. Stop and leave a comment, a like, a thumbs up, all that kind of stuff. And please make sure you subscribe to the Forex.Today YouTube channel. And feel free, there's like 4,000 videos associated with my work on YouTube. Feel free to watch any of them. I put a link in the chat here to a free video course. I think it's 4 videos seen by about 500,000 people. So see you tomorrow, guys. Cheers.